Hey everyone, and welcome back to Talk Tickers.
Yes, welcome back.
Today we're diving deep into Waste Management's Q4 2024 earnings call. And trust me, this one's got some interesting twists, even for a trash company.
That's right.
You know?
They may deal with garbage, but their financials are anything but.
Yeah.
They just wrapped up 2024 with some truly impressive results,
Yeah.
beating their own projections and hitting some major milestones.
Okay, so before we get into the nitty-gritty,
Okay,
paint us a picture.
sure.
What were the big headline numbers that jumped out at you?
Well, first off, their operating EBITDA margin hit 30% for the entire company.
Wow, 30%.
Yeah,
That's a pretty hefty margin,
it is.
especially for a business that's essentially about collecting and disposing of trash.
That's right.
How did they manage to pull that off?
Their core business is really the engine driving this success.
Okay.
Their collection and disposal segment saw operating EBITDA jump over 10% in 2024,
Wow.
reaching a record 37.2% margin.
So they're really squeezing profits out of their bread and butter operation.
Yeah, they are.
What's the secret sauce behind those margins?
It's a combination of smart pricing strategies and a laser focus on operational efficiency.
Okay.
They know how to charge what they're worth, and they've become incredibly good at running a tight ship.
Okay, let's unpack this a bit. When you say disciplined pricing,
Okay.
what does that look like in practice?
Yeah.
Are they raising prices? Are they negotiating better contracts?
Sure.
How are they approaching this?
They've been very strategic about passing on costs to customers, and they've also been focused on winning contracts that are more profitable for them.
So it's not just about raising prices across the board.
Right.
It's about being selective and focusing on the right kind of business.
Exactly.
That makes sense.
Yeah.
What about the operational efficiency side of things? What have they been doing to streamline their operations?
For one thing, their operating expenses as a percentage of revenue have been steadily dropping. They've been below 61% for 5 quarters in a row.
5 straight quarters under 61%.
Yeah.
That's some serious cost control, especially for a company of their size.
It is.
What specific initiatives have contributed to these lower expenses?
One key area is driver turnover.
Oh.
They've managed to get their driver turnover rate down to an all-time low, which means they're spending less on recruiting and training new drivers.
That makes sense. Experienced drivers are more efficient and familiar with the routes.
Right.
And that translates directly to cost savings.
Exactly.
But lower turnover suggests they're also doing something right in terms of employee satisfaction.
Absolutely. They've invested in driver training and retention programs, which not only helps with efficiency, but also contributes to a more positive work environment.
So it's a win-win situation.
Is.
They're saving money and creating a better workplace for their employees.
Yes.
Now, you mentioned earlier that their core business is exceeding organic growth targets.
Right.
What exactly does that mean? And how are they achieving it?
Back in 2019, they set a target for organic growth between 5% and 7%. They've been consistently blowing past that goal,
Really?
thanks to a combination of factors, including population growth and increased waste generation.
So they're benefiting from a growing market,
They are?
but they're also outperforming their peers within that market.
That's right.
What's giving them an edge?
They've been very strategic about expanding their services and moving into new markets.
Okay.
They're not just sticking to traditional waste collection anymore.
So diversification and strategic expansion are key parts of their growth strategy.
Yes.
It sounds like they're not content with just being a garbage company.
Right.
They want to be a leader in the broader environmental services industry.
Exactly.
That's fascinating.
Yeah.
We'll definitely have to dive deeper into those areas a bit later.
Okay.
But first, let's talk about something that caught my eye in their report.
Sure.
The acquisition of Stereocycle.
Yes.
That was a pretty big move.
It was a big move.
In November 2024, they acquired Stereocycle,
That's right.
which is a major player in the medical waste and secure information destruction industries.
Yes.
So they're branching out into a whole new sector.
Yeah.
What was the strategic rationale behind this acquisition?
It's a smart move for a couple of reasons.
Okay.
First, it allows them to diversify their revenue streams and tap into a new market with strong growth potential.
Okay.
Medical waste is a growing concern,
Right.
and Stereocycle is a leader in that space.
That makes sense. Healthcare is a massive industry, and it generates a lot of waste.
It does.
So it's a natural fit for waste management.
Yeah. it is.
What's the second reason?
It creates some really interesting cross-selling opportunities.
Okay.
They can now offer a complete suite of environmental services to businesses that might have previously used either Waste Management or Stereocycle separately.
Ah, so it's not just about gaining a foothold in a new market.
Right.
It's also about leveraging their existing customer base and offering them a wider range of services.
Exactly.
I could see how that would be a powerful growth driver.
It is.
Okay, we've covered a lot of ground here.
We have.
Impressive margins in their core business,
Yes.
exceeding organic growth targets, diversifying through acquisitions.
That's right.
Waste Management seems to have a lot going for them.
They do.
But what about the future? What are their projections for 2025?
They're expecting continued strength across all segments.
Okay.
Their guidance suggests total company operating EBITDA growth of 15% at the midpoint.
Wow.
That's almost $1 billion in growth.
$1 billion in growth.
Yeah.
Those are some serious numbers.
They are.
They're clearly not slowing down anytime soon. So they're firing on all cylinders. Their financials are stellar. They're making strategic acquisitions.
Yes.
It all sounds pretty rosy.
That does sound good.
But are there any potential challenges or headwinds on the horizon that investors should be aware of?
Well, one thing to keep in mind is that they're operating in a highly competitive industry.
Okay.
There are other large waste management companies out there,
Okay.
as well as smaller regional players.
So competition is always a factor.
It is.
But given their size and their track record, it seems like they're well positioned to handle the competition.
I think so.
What else?
Another potential challenge is the regulatory environment.
Okay.
Waste management is a heavily regulated industry,
Right.
and changes in regulations could impact their operations and profitability.
Right. Government policies and regulations can definitely have a big impact on businesses,
Yes.
especially in an industry like this.
Yeah.
Anything else?
Well, their expansion into new areas like medical waste management comes with its own set of risks and challenges.
Okay.
It's a different beast than traditional waste collection,
Okay.
and they'll need to navigate those complexities effectively.
Okay. So competition, regulatory changes, and the challenges of integrating new businesses.
Right.
Those are all valid concerns.
There.
But it sounds like they're aware of these risks and are taking steps to mitigate them.
I think that's fair to say.
Absolutely. They have a strong management team with a proven track record of success. So while there are always challenges, they seem to be well equipped to handle them.
I agree.
All right, well, this has been an incredibly insightful overview of Waste Management's business and their recent performance.
Yeah.
But before we move on, I'm curious about one thing.
Okay.
You mentioned that they're looking beyond traditional waste
Yes.
and exploring opportunities in areas like renewable energy.
Right.
What exactly does that involve?
They've been investing heavily in renewable natural gas production at their landfills.
Renewable natural gas from landfills.
Yeah.
That sounds intriguing.
It is.
How does that work?
As waste decomposes in landfills, it releases methane,
Great.
which is a potent greenhouse gas.
Yeah.
They're capturing that methane
Okay.
and converting it into renewable natural gas,
Got it.
which can be used to power homes and businesses.
So they're turning a harmful byproduct into a valuable energy source.
That's right.
That's pretty impressive.
Yeah, it is.
What's the scale of this operation?
They've been steadily expanding their renewable natural gas production capacity.
Okay.
They brought 5 new facilities online in 2024 alone.
5 new facilities in a single year.
Yeah,
That's a significant commitment.
it is.
Are they seeing a good return on this investment?
Absolutely.
How so?
Renewable natural gas commands a premium price in the market,
Uh-huh.
and it's also eligible for government incentives.
Uh-huh.
So it's a win-win from both a financial and an environmental perspective.
It sounds like they're positioning themselves as a leader in the renewable energy space,
Yeah, they are.
and it aligns perfectly with their sustainability goals.
Exactly.
They're showing that waste management can be a key part of the clean energy transition.
That's right.
All right, so we've talked about their strong financials, their strategic acquisitions, their push into renewable energy.
Right.
It's clear that Waste Management is a company on the move.
Yeah.
But what about the risks? Every business faces challenges.
That's true.
What are some of the key risks
Yeah.
that investors should be aware of
Yeah.
when it comes to waste management?
Well, as I mentioned earlier, competition is always a factor in this industry.
Okay. Yeah.
There are other large players like Republic Services and Waste Connections,
Okay.
as well as smaller regional companies.
So it's a crowded market.
It is.
How does waste management differentiate itself from the competition?
They have a few key advantages.
Okay.
They're the largest player in the industry with a nationwide network of landfills and collection operations. They also have a strong track record of innovation and a commitment to sustainability.
So size, scale, and a reputation for sustainability.
All right.
Those are some powerful differentiators.
There.
What about the regulatory environment?
Mhm.
You mentioned that as a potential risk earlier.
Yes, waste management is a heavily regulated industry. And changes in environmental regulations or landfill permitting could impact their operations.
So they're subject to the whims of government policy.
In a way, yes.
That's definitely something to keep an eye on.
It is.
Are there any specific regulatory changes on the horizon that could impact them?
There's always the possibility of new legislation or stricter enforcement of existing regulations,
Okay.
but they have a strong legal and regulatory team that's constantly monitoring the landscape.
So they're proactive about staying ahead of the curve.
Yes, they are.
That's reassuring.
Mm-hmm.
What about economic conditions?
Okay.
How would a recession or a slowdown in economic growth impact their business?
Waste generation tends to be fairly resilient even in economic downturns.
Okay.
People still produce garbage regardless of the state of the economy.
Right.
However, industrial and commercial waste volumes could decline if there's a significant economic slowdown.
So their revenue might take a hit in a recession,
It might.
but it's unlikely to be a catastrophic event.
Right.
They're somewhat insulated from economic cycles
Yeah.
by the nature of their business.
Exactly. They provide an essential service that's always in demand.
All right, so we've covered a lot of ground today.
We have.
We've talked about Waste Management's impressive financial performance,
Yes.
their strategic acquisitions,
Mhm.
their push into renewable energy,
Right.
and the key risks that investors should be aware of.
Uh-huh.
It's clear that they're a company with a lot of potential,
Yeah.
but also some challenges to navigate.
There are always challenges.
Absolutely.
Yeah.
They're a leader in a growing industry with a solid track record and a bright future.
I think that's a fair assessment.
Well, that wraps up our deep dive
Okay.
into Waste Management's Q4 2024 earnings call.
All right.
But before we sign off, we always like to have a little fun
Okay, sure.
with our This Is Not Financial Advice segment,
Yes.
where we pitch completely outrageous
Okay.
but potentially plausible trade idea,
All right.
inspired by what we've learned today.
Sounds good.
Are you ready for this one?
Hit me with it. And remember, folks, this is purely hypothetical.
Absolutely.
And for entertainment purposes only.
Right.
We are not financial advisors.
Okay, so we know waste management is all about sustainability and turning trash into treasure,
That's right.
They're practically alchemists turning garbage into gold.
Yeah.
What if they took it a step further
Okay.
and partnered with a major consumer goods company
Okay.
to create a closed-loop recycling system for plastic packaging?
A closed loop system.
Yeah.
What does that mean?
It means that plastic packaging would be collected,
Okay.
sorted, and recycled into new packaging over and over again, eliminating plastic waste entirely.
Wow.
So instead of plastic ending up in landfills or the ocean,
Right.
it would be continuously recycled and reused.
Okay. I see.
That's an ambitious goal.
It is, but it's not entirely far-fetched.
Yeah.
Technology for advanced plastic recycling is rapidly improving, and consumer demand for sustainable packaging is growing.
So waste management, with its expertise in waste collection and sorting, and a major consumer goods company with its vast supply chain and manufacturing capabilities,
Right.
could team up to create a truly circular economy for plastic.
Exactly. They could revolutionize the way we deal with plastic waste
Yeah.
and create a more sustainable future.
But wouldn't this require a massive investment in infrastructure and technology?
Of course it would.
Yeah.
But remember, we're talking about two giants in their respective industries.
Right.
They have the resources and the scale to pull it off.
And the potential benefits are enormous.
They are.
They could reduce plastic pollution,
Yes.
create a new revenue stream, and enhance their brand reputation.
Absolutely. It's a win-win for everyone involved.
Really, everyone.
The companies, the consumers, and the planet.
All right, so here's our This Is Not Financial Advice trade idea.
Okay.
Buy stock in Waste Management
Uh-huh.
and a major consumer goods company,
Okay.
and bet on them joining forces to create a closed-loop plastic recycling system.
It's a long shot, but hey, stranger things have happened.
All right, folks. That's it for this episode of Talk Tickers.
Okay.
We hope you enjoyed our deep dive into waste management
Yeah.
and our wild trade idea.
It was a fun one.
As always, remember to do your own research
Yes.
and consult with a financial advisor before making any investment decisions.
Yeah, absolutely.
And who knows, maybe one day we'll all be sipping our morning coffee from a recycled plastic cup.
Yeah.
That used to be a milk jug.
That would be great.
Until next time, keep it clean and keep those trade ideas coming.
All right. Thanks, everyone, for listening. Yeah, that was a fun one. I always enjoy letting our imaginations run wild.
Me too. Now let's bring it back down to earth and talk about one last thing that stood out to me from this earnings call.
Okay.
They mentioned their efforts to strategically shrink their residential waste business.
Yeah, that's right. It's a bit counterintuitive, but it actually makes a lot of sense.
How so? Why would they want to shrink a part of their business?
Well, the residential waste business is notoriously difficult to manage, and it often has lower profit margins compared to other segments.
So it's a drag on their overall profitability.
Exactly. And they've been very transparent about their strategy to focus on higher margin businesses like commercial and industrial waste,
Okay.
as well as specialized services like medical waste management.
So it's not about abandoning residential waste altogether.
Right.
It's about optimizing their portfolio and focusing on the areas where they can generate the best returns.
Precisely. They're being very strategic about where they allocate their capital and resources.
That makes a lot of sense. It's all about maximizing value for their shareholders.
Absolutely. And this strategic shift is already paying off.
Oh, really?
Their operating margins have been steadily improving as they've been shrinking their residential waste business.
So it's a classic example of addition by subtraction. Sometimes letting go of a less profitable part of your business can actually make you stronger overall.
Exactly. And it allows them to focus on areas where they have a clear competitive advantage.
All right, so to wrap things up, Waste Management is a company that's firing on all cylinders.
Yeah, I think that's fair to say.
They're delivering strong financial performance, making smart acquisitions, and positioning themselves for a sustainable future.
They're a prime example of a company that's not afraid to evolve and adapt to the changing market.
We've covered a lot of ground today, from the nitty-gritty of their earnings call to our outlandish trade idea. We hope you found this deep dive informative and engaging.
Yeah, it was a good one.
And as always, remember, this is just our analysis and it's not financial advice.
Right. Do your own research, consult with a financial advisor,
Yes,
and make informed decisions based on your own individual circumstances.
absolutely. Thanks for joining us, everyone.
Yes, thanks for listening. We'll see you next time.